Hello, everyone, and welcome to another quarterly webinar brought to you by Apollo Crypto. My name's Tim Johnston. I'm Managing Director, and as always, it is a pleasure to be joined by Henrik Andersson, our Chief Investment Officer. Hello, Henrik.
Hi, Tim. Pleasure to be here again.
And it's also a pleasure to be joined by Investment Partner Marc Woodward. Hello, Marc.
Hi, Tim.
Thanks for your time today, gentlemen, and thanks for the audience for attending. We obviously run these webinars quarterly. A lot happens in crypto markets every 3 months, so I'm sure there's plenty to discuss today. For the audience, if you do have questions, please feel free to fire them through. There's a Q&A and chat function. Generally suggest sending the questions in early so we can answer them as we go. For anyone new to Apollo Crypto, we're a crypto hedge fund manager. Throughout the quarter, we celebrated our 5-year anniversary. So that was quite a milestone. So we have a 5-year track record now. We manage 3 funds across the whole crypto asset market space, and we enjoy what we do. So the purpose of this webinar is really to provide investors and our followers an update on what's been going on. Today's not financial advice. It's just an informative discussion. So please do your own research. Henrik, it's been a busy 3 months in crypto, as always. What's been happening?
Yeah, absolutely. Yeah, maybe a good opportunity to look back on obviously the last quarter, but we're also coming into 2023 this quarter, and came off a very dramatic 2022. I think we've all sort of experienced that, and you know, it was a very tough macro environment last year. Some very specific crypto events as well put a lot of pressure on crypto markets. What come to mind is especially in the collapse of Luna, 3 Arrow Capital, and FTX in November. So very weak sentiment last year. That has improved dramatically since last year. So we have seen strong performance across the crypto markets for the first quarter of this year. And looking across our 3 funds, our Australian Apollo Crypto Fund have performed strongly throughout the quarter with three positive months. Our Frontier Fund, which is one of our offshore funds that we is an advisor for, came out this year very strong as well, over 35% positive performance in January, followed up by positive performance in February. March a little bit weaker for that fund, and happy to go into more on that because that's pretty interesting. And then our kind of third fund is the Market Neutral Fund, which has shown 3 positive months as well for this quarter. So strong performance across the board. I did mention that our Australian fund performed better in March than the Frontier Fund. The reason for that is that Bitcoin has performed more strong, I guess, than other assets in this space throughout the quarter. So if you look at year-to-date returns, Bitcoin has performed better than, for example, Ethereum year-to-date, which is quite unusual in a recovering market. Bitcoin, as we know, is the largest asset, it's the blue chip asset, but it doesn't have the highest beta, meaning that there are other assets there that have higher volatility and tend to perhaps perform better in a positive market. That has not been the case, and we'll talk more about why that is, but I think one of the reasons is related to what's happening to the banking system in the US and elsewhere. So it's that has been a strong narrative for Bitcoin in the quarter. So I think that's a quick summary of the quarter, and then we can go into more specifics as well.
Sure. Thank you, Henrik. And you did touch on this, and I think it'd be good to get Marc's input, not just because he has an American accent, on the developments in the States. There's been a lot happening over there, Marc.
Yeah, sure. You know, as both you and Henrik have highlighted, quite a active quarter in crypto, perhaps one of the more active than we've seen in the last few years. I think coming out of 2022, everyone was hopeful that all the leverage, black swans, and sort of bad actors and kind of wild events were sort of in the rearview mirror. And we had a very strong January as people started, to look into the future and, a potentially more favorable macroeconomic environment. So, we had a strong January. February started some of the regulatory actions. We're starting to see the SEC go after Kraken, a large U.S. exchange, and fine them $30 million for a staking feature that they had. That caused Coinbase, which has a similar feature and product, to lose 20% of its market cap in one day. So that really started to unsettle the crypto markets. And at the time, we sort of highlighted, where there's smoke, there's fire. Are there going to be more enforcement actions? Unfortunately, we were right, and there were quite a few other things that came across. I think the biggest impact is probably, as Henrik highlighted, the failure of the U.S. banks. So the crypto and venture capital friendly banks in the U.S. being Silicon Valley Bank, Signature, and Silvergate. These banks are typically very friendly to innovative technology companies. And it really started to look like a coordinated effort among U.S. regulators to really try to put their foot on crypto and slow down the innovation. This is really a 180-degree turn from what the Biden administration had said almost a year ago at the time, saying that they were going to take a somewhat agnostic and research-driven approach to crypto, and they encouraged all the regulatory agencies to come up with new laws and policies. But unfortunately, I think the speed of some of the blowups of the centralized platforms last year caused the regulatory agencies just to take kind of a blanket, very negative view of crypto and do regulation by enforcement, which is suboptimal for those in the industry and for those in the industry that have been asking the regulators to come up with more favorable and clear regulations. So we went through this, very sort of tumultuous period where, we're having a bank fail, a lot of fear and, and sort of contagion, seeing a lot of, deposits leaving U.S. banks. So going to larger banks like JP Morgan and potentially in crypto, right? So you've seen a big sort of a narrative shift that, okay, perhaps what the Bitcoin sort of maximalists have always said, that the US banking system is going to fail and everyone's going to be on a Bitcoin standard. Perhaps that narrative really started to take hold. We'll see. Nevertheless, a lot of banks are losing deposits. JP Morgan has actually come out and said that they think the banking crisis is going to last a few years. Obviously, speaking his own book, he's the largest bank, or he runs the largest bank, and he's the recipient of a lot of these new inflows. The other thing I would just highlight here, at Apollo Crypto, we are big fans and supporters of DeFi. So those platforms that allow lending and borrowing, exchange, derivatives trading, payments, remittances, and so on. So replacing some of the legacy financial applications have actually been very, very strong. And we're seeing increased trading volume away from centralized exchanges. It's something we also wrote about earlier in the quarter. What's going to be the mix of centralized and decentralized exchanges, and how does that play out? So summarizing all of that, I think we're going to continue to have a very tumultuous financial system in the US. We'll continue to see regulatory action. It looks like crypto is going to continue to be strong. I think that narrative has been reawoken. There's certainly a lot of cash on the sidelines, and you're seeing that strength from the end of the quarter come into this quarter as well. So I think we're looking forward to a fairly strong year. Certainly going to be volatile. Certainly expect more black swans and more interesting quarters.
Yeah, I think add to that as well. Sorry to interrupt you, Tim, but I thought what Mark said was really interesting there, that we have seen actually increased activity in some sectors within crypto due to the events of last year, the collapse of FTX, and some of the regulation coming in with regards to more centralized entities. So we actually seen Uniswap, for example, which is a decentralized exchange, have more volume than Coinbase now for a couple of months, which is quite amazing to see. We've also seen derivatives on-chain exchanges like GMX and Synthetics doing really well since the collapse of FTX. And as Mark mentioned, I think Bitcoin has also really played into this narrative more recently. Bitcoin, worth mentioning as well that we have seen some new use cases with regards to Bitcoin that he has started basically at the start of this quarter. So that was a surprise to us, but we are now seeing NFTs on Bitcoin, and that has really continued to see a lot of activity throughout the quarter, and this is potentially a new use case for Bitcoin as well. So yeah, I just wanted to add that.
Yeah, thank you, Henrik. Thank you, Mark. I've got two follow-up questions. One is a theory that I've heard, and the question is around why now? Why have the US regulators just taken this fairly drastic stance? They seem to be going after everyone and anyone. And the theory I've heard is that Sam Bankman-Fried, obviously the former founder of FTX, was quite active in Washington throughout last year and the years beforehand, buddying with the politicians on Capitol Hill, making very large donations, I understand. And then obviously the FTX fallouts occurred in November last year. So the theory is that perhaps some of the people in Washington were left a little red-faced, and that may have led to this regulatory action. Keen for either of your thoughts on that one.
Yeah, I'll take that one first. I think there's a lot of truth in that. I mean, the SEC had really done absolutely nothing, in 2021 and 2022, besides going after a few crypto influencers. They'd really not had any new laws or regulations, despite, large companies like Coinbase and Grayscale, which operates several large trusts that investors can get exposure to crypto in the regulated markets in the US. They have consistently rejected ETF applications from a number of companies throughout the years, even though other jurisdictions had been doing that. So they've been taking a very obstinate approach as it was. And then, I think the FTX blow up was such an embarrassment. They had given so much money to, on both sides, the political spectrum. And given the actions that were happening at FTX, it was a huge embarrassment. So the SEC had to get off and do something. And they, just decided to say, look, they're all criminals and frauds. So we're just going to sue everybody and slow things down and see what happens. And so they're really throwing the baby out with the bathwater, right? Going after companies like Coinbase, which have always been good actors, in Grayscale, which is some of the earliest, crypto companies in the US. So yeah, I think it's a knee-jerk reaction, trying to make themselves look like they're doing something.
Sure. And then following on from that, what happens? What are the effects of this? I mean, we've seen a quarter's worth of data is not much, but obviously we've had this lot of regulatory action throughout the quarter, and markets have been very strong. They've performed very well. But Henrik, maybe I'll throw it to you. What happens if, let's assume, the US just bans crypto outright? Like, I don't think that's going to happen, but let's just assume worst case. What happens if the US bans crypto? Is this an existential crisis for crypto markets, or does it just move offshore to the UAE or to Hong Kong, where they've sort of seems to have changed their tune?
Yeah, good question. So I sort of agree with you. Bitcoin and crypto at large cannot be banned. These are all different assets, and I think the regulators in the US and elsewhere are looking at each individual asset to determine if it's a security, not a security, if it's a commodity, not a commodity. In the US, for example, we have commodity license exchanges trading Ethereum and Bitcoin derivatives. So from that, I think, can draw the conclusion that those assets are considered commodities. I don't think anyone expecting crypto as a whole to be banned. Probably can't be banned. And I think there are strong protections in countries like like the US to be able to hold assets like crypto assets. So that's nothing we are expecting. But I think the clampdown that we are seeing with regards to traditional banks, banking crypto companies, and so on, is definitely hurts the US crypto industry, if you like. So from a competitive standpoint, I think it makes the US less competitive on a global scale. So I think that's a very clear impact from what's going on there. Yeah, that was my view. I don't know, Mark, if you agree with that.
I do. I think it'd be very hard to enact an outright ban. I mean, that would have to be I would imagine an act of Congress. I doubt it's something that somebody like, Joe Biden would do through executive order. There are a number of already publicly listed companies that focus almost exclusively on crypto. There's a number of US banks already involved in crypto. So these are huge, large companies in the US with a lot of influence. So you wouldn't want to see kind of Blackstone or, some of the larger banks, BNY Mellon, probably the largest bank in the world, is involved in crypto. So it would be sort of shooting themselves in the foot. I mean, there is a bit of more of a conspiracy theory that they're all sort of lobbying the SEC and others to, or the CFTC to slow down the innovation of crypto, so the large banks can sort of catch up and the large institutions can really get a hold of this new technology before they're overrun. Now, it is interesting. We have seen a ban, right? We've seen China ban Bitcoin mining, and the effect of that was all the mining just moved offshore, and within 3 or 4 months, hash rate was back to all-time high. It's much, much higher now. And actually now Hong Kong, which is part of China, is actually opening up crypto trading for the major cryptos as of June 1. So that kind of soft unban has already happened. So it's just sort of interesting that China and the US have now swapped places twice, right? So China bans it, US embraced it. Now US is sort of banning it, and now China's opening it back up again. So we'll see. Also,
maybe could add that there are over 20 million Americans holding crypto today. So this is quite significant base. There are some lawmakers that are, part of their candidacy is to be pro crypto, and we have seen certain regions in the US becoming quite crypto friendly as well. So and as Mark mentioned, there are Coinbase, for example, is a public company. We have big traditional financial institutions like Fidelity that are trading crypto as well. So it's definitely a very polarizing issue in the US, it seems like.
Yeah, and I think for investors or people that are on the call that may be invested in either the Apollo Crypto Frontier Fund or the Apollo Crypto Market Neutral Fund, in terms of the direct effects that we've seen, those funds used to bank with Signature Bank. Signature Bank has been acquired by Flagstaff Bank, I think it is, another bank in the States, and that acquiring company did not take on Signature Bank's crypto customers. So that includes the offshore funds, but just in terms of inside information and what we've been seeing, I'm sort of leading the charge to find replacement banks. I've probably come across 10 banks that are open for business. I've probably had conversations with 6, and we've got one account that's basically been signed and ready to open, and another which looks very promising as well. So there might be slight interruptions to those funds. But we don't think that it's going to be too severe, and hopefully it will be business as usual. I'll pause there just to remind folks, any questions, please feel free to send them through for Henrik and Mark. Another question from me, Henrik and Mark, I guess, primary deals. What are we seeing this quarter? What sort of investments in new crypto projects have we looked at?
Yeah, sure. We've done less investments, I would say, in new projects in the last quarter. There has been, I believe, a trend, at least for us, to kind of do follow-on rounds into projects that we invested in earlier that are seeing good traction. So that's a clear trend we have seen. So we've done less sort of new deals, if you like. Yeah, happy to do follow-on rounds in projects that are showing promise. So that's a clear trend there, I think. Mark, happy for your thoughts as well on that.
Yeah, sure. Not to go into the specific deals as much, but an area that we've been investing in is NFT financialization. So the NFT space, if you've been on any of these Zooms in the past, you have heard us talk about NFTs. So as these or as this sector of crypto grows, there's a large asset base there. One of the amazing things about crypto is you're able to generate yield from just about any asset, right? Whether you are staking it on a network to help secure that specific network, whether you are sort of pledging it as collateral so that you want to borrow against it. Someone can generate yield that way. And there's a new class of protocols that are helping enable some of those for NFTs. So you can, if you have an inventory of NFTs that are quite valuable, you don't want to sell them, but you want to generate a yield, or you want to be able to borrow against them. There's a whole class of new projects that are helping enable that.
And maybe I think as well that our funds are liquid funds. We are not solely focusing on VC, so we can be very picky when it comes to deals and be patient. We're not forced to deploy capital as such because we invest in secondary markets as well as in primary markets. As Mark mentioned, I think the NFT-Fi narrative is strong. We have done a number of investments there. We have seen a couple of them launch during the quarter, like NFT Perp and Insert Finance. And I would expect us to do more deals in that area for sure.
Guys, talk to us about the Ethereum competitor space. So that's a space that we watch very closely. Ethereum's obviously the largest smart contracting platform. There's always a lot of movement in this space. Solana, we were quite negative on towards the end of last year, obviously with close ties to FTX and SBF. That seems to rebound a little bit this quarter. Avalanche is another asset that we've done very well out of. But I think our thoughts have changed a little bit on that. And just before you do answer, Henrik, I should mention, so the assets that I'm talking about, they make up quite a large part of both the Apollo Crypto Fund and the Apollo Crypto Frontier Fund. So it is a very keen space that we watch.
Yeah, absolutely. So if you guys remember my predictions for the year, we talked a lot about, or I talked a lot about kind of the Ethereum narrative and how we becoming more bullish on Ethereum and the scaling solutions for Ethereum. So that means that on the margin, we are perhaps a little bit less optimistic of some of the alternative L1s. So we have seen L2s perform really strongly. So these are Ethereum L2s that are helping to scale Ethereum. So we have now seen, we now have $8 billion in TVL on the likes of Optimism and Arbitrum, which are two of the major Ethereum L2s. Since October last year, so for the last 6 months, we have seen more transactions on Ethereum L2 than on the Ethereum mainnet. So we can really see that there is a shift of transactions going to the L2s. Just in the last couple of weeks, we saw the launch of the Arbitrum native token that is now part of the portfolio as well, the ARB token. So I think that narrative will continue. That's probably on the margin, at least net negative for alternative L1s. We expect other Ethereum L2s to launch as well. We recently saw Polygon launched Ethereum rollup just in the last week, and other coming to the market as well. So strong narrative for the Ethereum ecosystem. There are some interesting things happening to the Ethereum mainnet as well that we probably should talk about. They are enabling withdrawals of staked ETH starting next week. That's the so-called Shanghai upgrade that is coming on April 12th. There's been a lot of talk about that upgrade, if it's a negative or a positive. We think that at least in the medium term, it will be a positive. They will make more people, investors, more confident in staking their ETH because they know they can withdraw the ETH and get the ETH back if they want to. So that should probably be a net positive, we believe, for Ethereum.
And Henrik, talk to us about how you see the evolution of the Ethereum blockchain. So last year we saw the transition from proof of work to proof of stake. And that was obviously a huge upgrade for the underlying Ethereum blockchain. And then what we're just talking about then is layer 2 is built on top of the Ethereum blockchain to help scale Ethereum. Do you see a future where the Ethereum blockchain itself improves and offers more throughput and scale and makes these L2s redundant, or is it a watch this space, or you think that they can all coexist happily?
Yeah, they will coexist, I believe. So I think we will see increased adoption of L2s. The mainnet Ethereum sort of base layer will most likely mainly be used for validating L2 transactions. So actual users will go directly to L2s. There is a long-term scaling solution for the base network as well, but that's many years in the future, where you will basically implement something called sharding for the mainnet. But even so, I think L2s are a core part of the scaling of Ethereum. So we have seen recently as well, Coinbase, the largest US-based exchange, announced that they will support a new Ethereum L2 that they call Base. So that was also a big announcement during the quarter. We have seen these trends during the last few years where exchanges sort of support their own blockchain, if you like. Binance have the Binance chain, which has been very successful, and now Coinbase is building on top of Ethereum.
Great, thank you, Henrik. That's a very comprehensive recap. We usually sort of allow 15 minutes for questions. So I've got one here, but feel free to shoot through some more. Now would be a good time. So a question here, can you touch on the significance of the ARB protocol in the last few weeks?
Yeah, so the ARB protocol is what I mentioned, the Arbitrum network, which is now the largest L2 scaling solution for Ethereum. I mentioned that there are over $8 billion in TVL value locked in DeFi on L2s, and probably half of that is on Arbitrum. It was rumored for a long time that they will launch their own token, which they finally did, and early users were airdropped that token as well. So I think protocols like that, Optimism and Arbitrum, will continue to see increased adoption. We do hold ARB and other L2s in our portfolio.
Great, thank you. Not as many questions today. Maybe people are being shy. I'll come up with. Here we go. Here's another one from Christopher. What do you see happening if the US closes the fiat on-ramp and off-ramps completely? E.g. Operation Choke Point 2.0 succeeds. Mark, maybe you can take that one.
Yeah, I mean, I think there's been a lot of discussion about Choke Point 2.0 on Twitter. I don't know that it's actually been enacted. I mean, it seems like it was a bit of a, as we said earlier in the, in our Zoom here, that it was a bit of a knee-jerk reaction to the events of last year. Yeah, I mean, if they cut it off completely, so they're saying no US dollar no US dollar banks can touch any sort of crypto company. I have a hard time believing they will completely shut off those fiat on-ramps. You have some of the largest financial institutions and money managers in crypto. Fidelity, is $4.3 trillion in assets under management. It's one of the strongest and oldest financial managers, 40 million customers in the United States. They're offering spot ETH and BTC purchases. They will likely expand that over time. You have numerous already public companies that are connected to the banking system, Coinbase being one, and others, Gemini, so on and so forth. So I don't know that they will completely cut it off. I think they have larger issues to worry about in the banking sector. And they've sort of exacerbated those issues by shutting down Signature and Silvergate. So I think their fingers are a bit burnt, and they don't want to cause any larger, I'd say disruptions to the U.S. financial system. You're already seeing deposits flee. What happens if people, get wind that they're going to shut off these on-ramps and they, send all their money into, crypto. So I think they have to be very careful there.
Also, I think there's an argument to be made that if they go too hard on crypto, it will force consumers offshore, using offshore exchanges, offshore banks, potentially institutions that they can't regulate. So that arguably increases the risk for the average consumer if they can't use a US regulated exchange and so on. So I think that's probably something that the lawmakers understand as well.
Yeah, I think the other narrative that's in the background, it's sort of been overshadowed by a few other things, is what's going on with the US dollar, and will it remain an international reserve currency? You've seen some very significant moves by China, Russia, some African and South American countries to create a new currency, or to agree for using a basket of currencies, or the Chinese yuan as a currency. The irony here is that in crypto, everyone uses US dollar backed stable coins, right? So the US dollar has already sort of extended its dominance into crypto. So for the US to go and sort of shoot that, would seem a bit short-sighted. Everyone trades against US dollar in crypto. It would seem to me it's something that they would want to encourage, that in this new financial system, everyone is still using the US dollar.
Yeah, in the conversations that I've had with banks that we may use for the offshore funds, I've asked them that question. I said, well, if the regulators have gone after Silvergate and Signature, and I think those other banks had other issues, then how come you're happy to take on crypto customers? And I had a conversation yesterday morning, and the answer from that bank was, well, it appears to be a flight to quality. So Coinbase is now banking, I think, with Cross River. And we've mentioned other names on this call. So if you're a crypto customer and it's a crypto project which may not have a lot of merit to it or sort of substance to it, I think that's going to potentially be a little bit difficult. Where we would like to think we're part of that flight to quality, and that we're quality fund managers and we have a pretty simple business. So those conversations are still going. Another couple of questions here. Thank you for sending them through. Henrik, how is Apollo positioned to navigate the volatility over the coming years?
Yeah, so as Tim mentioned, we have been operating for 5 years now. Crypto has always been volatile. We think it will continue to be volatile. So nothing really new from our standpoint. We try to take advantage of volatility. Something that we're used to. And as kind of on a global scale, important to remember that crypto is relatively small still, so most likely will continue to be very volatile.
Yeah, and I think the other thing that we stress with investors as well is position sizing within the broader portfolio. So as bullish as we are on crypto, we don't go and advocate for 20% of the portfolio on crypto. We do think it's prudent to have 50 basis points, 1% or 2%. And if that 2% halves, it's 1% for the whole portfolio down. which is not great, and no one likes it, but it's not as drastic as if it were a larger position size. So we think that, as Henrik said, volatility creates opportunity. Volatility is not necessarily equal risk. And we're quite lucky, and maybe it's part luck, but part education and doing these webinars and the communication we have with our investors, that for the Apollo Crypto Fund, for example, we have seen very few redemptions throughout last year, throughout the full 5 years. I think we probably have in that fund probably about 450 investors, and we've probably had about 15 redemptions throughout the whole journey of the fund. So people generally understand, or what that tells me is that people understand that crypto is a long-term investment, and ride that volatility. Another question here. Seems like crypto markets are increasingly player versus player. If the current Fed fund rates are to stick around at these levels for the next few months, do you think there's any upcoming events to attract major liquidity or new entrants? And a question mark, Shanghai, the Shanghai upgrade. Henrik?
Mark, do you want to take that one?
I'd always said that I was hopeful of seeing a Bitcoin ETF. I think that's probably off the table under the current administration in the US, at least. I think we highlighted Hong Kong opening up again. And I think, we've seen almost a 70% rebound in Bitcoin, a little bit less for Ethereum, very strong market this quarter. Returns tend to attract interest. Certainly there's going to be volatility. And I think investors will start to expect certainly a pause in the Fed fund rates, perhaps as early as May, but you've already seen Canada and Australia pause in the last week. So that is, perhaps a canary in the coal mine as to what the Fed is going to do. They're in a bit of a hard place. Oil prices are going up. That will impact inflation. It's going to be hard to impact inflation by raising interest rates another quarter point, especially when it's driven by energy costs. A lot of that demand is not variable, right? People have to drive to work. Trucking companies have to use it, airplanes, so on and so forth. So the Fed's in a bit of a hard place. Do they raise interest rates and sort of continue on this narrative? And that would just place more stress on the banking system. So it may end up costing them a lot more, raise interest rates quarter point than just pausing and having inflation hopefully stay flat or just live with high inflation. So.
Yeah, that's an important point that we're seeing a changing macro environment. We've seen tightening from the central banks throughout the last year. We've seen 10 rate hikes in a row from the RBA here in Australia. They just paused this week. I think rates in the US are expected to peak sometime this year if it hasn't peaked already. So that is improving perhaps macro environment from that standpoint.
Great. We're 40 minutes past the hour, so I think that's almost our allotted time. We've got one last question, which is a simple one, which I can take. What's the current funds under management? So it's more or less about $100 million Australian across the 3 funds. Excellent. Well, I think we will wrap it up there. Thank you very much, Henrik, for joining us.
Thank you, and see you all next quarter again.
Thank you very much, Mark, for your input as well, and thanks for joining.
My pleasure. Thanks, everyone.
Thanks, everyone. Have a great week. See you next time.